There's a number that does not appear in the listing price. It may not be accurately reflected in the mortgage estimate you receive online. Your builder probably will not put it in the brochure, and far too often buyers don't see the real number until they're already emotionally invested in the house. And that number is homeowners insurance. For buyers relocating to Florida from another state, it can be one of the biggest surprises in the entire transaction. And if you are buying in Lakewood Ranch, Sarasota, or anywhere along the Gulf Coast of Florida, subscribe to this channel. Every week I talk about the costs, decisions, and the potential problems buyers need to understand before they sign a contract, not after. I'm George Latos with Zachos Realty Design Group, and today I want to talk about what Florida homeowners insurance may actually cost in 2026, what causes that number to change so dramatically from one property to another, and what you should verify before making an offer. Because I've seen insurance costs place real pressure on a transaction, and in some cases I've seen that number stop a deal entirely. So let's get into it. One national insurance analysis projects that the average Florida homeowner's premium could reach approximately $8,500 a year by the end of 2026. The projected national average is approximately $3,057. That would make the average Florida premium approximately 2.8 times the national average. But here is something very important. Statewide averages are not property-specific quotes. Different studies use different dwelling limits, deductibles, home characteristics, and assumptions. That is why we see dramatically different numbers depending on the source. If the mortgage estimate you received used a generic national insurance figure, that estimate may not accurately reflect the Florida property you're considering. I regularly see buyers arrive with $150 or $200 a month budgeted for insurance, and that might be possible for certain newer inland, well-mitigated homes. But buyers should never assume it until an insurance agent has reviewed the actual property. Florida's Office of Insurance Regulation reported that as of September 30th, 2025, the average homeowner's premium, including wind coverage, was approximately $3,187 in Manatee County and $3,482 in Sarasota County. However, another 2026 rate analysis estimated approximately $6,800 for a standardized Sarasota city policy with $300,000 in dwelling and a $1,000 deductible. Those numbers sound contradictory, but they're measuring different things. The state figure averages thousands of existing policies with different insured values, deductible, ages, and construction types. The Sarasota city figure is based on standardized coverage example. And remember, $300,000 of dwelling coverage does not necessarily mean a $300,000 purchase price. Dwelling coverage is based primarily on an estimated cost to rebuild the structure, not the market value of the home or the value of the land. That is why quoting an average without understanding how it was calculated can be misleading. A newer inland home with a newer roof, current building codes, hurricane protection, and favorable construction may receive a relatively reasonable quote. An older home, a coastal property, a barrier island home, or a high-value property can be a completely different story. Premiums can move into the five figures, and flood insurance may be a separate additional expense. The difference between an inland Lakewood Ranch property and a coastal Sarasota property, therefore, is not simply a lifestyle decision. It can become a major long-term carrying cost decision. Now, there are four things that change the number. The first is the property's location and construction. The insurer will consider the home's replacement cost, distance from the coast, construction type, year built, wind exposure, roof design, hurricane protection, and several other characteristics. Two homes with the same purchase price can receive dramatically different insurance quotes. The second is the roof. Roof age and condition can affect both the price and the number of insurers willing to consider the property. However, the idea that every Florida roof becomes automatically uninsurable at 15 years old is not accurate. Under Florida law, when a roof is at least 15 years old, the homeowner must generally be given an opportunity to obtain an authorized inspection before the insurer requires replacement or refuses coverage solely based on age. If that inspection shows the roof has at least 5 years of remaining useful life, age alone generally cannot be the reason for refusing or not renewing the policy. That does not mean the roof will not affect the quote. It means buyers should investigate the roof's age, condition, permit, materials, and remaining useful life rather than relying on a simple age cutoff. And if you're purchasing an older home, determine what the insurer will require you to make the roof, which is someone else's problem, your own. The third is flood exposure. Homeowners insurance and flood insurance are generally separate coverages. A property in a FEMA flood zone, AE, will normally require flood insurance when the buyer has a federally regulated insured mortgage. A property in a Zone X generally does not carry the same federal mandatory purchase requirement. But Zone X does not mean the property cannot flood, and it does not guarantee that the lender will never request flood coverage. Flood premiums can vary significantly based on the property's elevation, distance from the water, replacement cost, foundation, flood history, and other risk characteristics. Do not simply ask whether flood insurance is required. Ask what the actual flood policy is likely to cost. The fourth issue is claims history. A buyer does not literally assume responsibility for the previous owner's insurance claims. However, claims associated with the property can appear in insurance databases and can affect underwriting, eligibility, and pricing. Your own personal claims history can also affect the quote. Ask whether a seller can provide a property loss or clue report and have your insurance agent investigate the property's history as early as possible. And before filing a relatively small homeowner's claim, compare the likely insurance payment with your deductible and discuss the potential consequences with a licensed insurance professional. Filing every small loss as a claim is not always the best financial decision, but neither should buyers assume that a legitimate covered claim should not be filed. There is some legitimate good news for 2026. Citizens Property Insurance, Florida state-created insurer of last resort, received approval for an average statewide reduction of approximately 8.8% for homeowners' multi-peril policies beginning July 2026. That's an average. It does not mean every Citizens customer or every location will receive the same reduction. Florida insurance regulators have also reported that 20 property and casualty insurers entered the state's market following the legislative reforms, and there are signs that competition and market conditions are improving after several very extremely difficult years. But improving does not mean inexpensive. Buyers considering older homes, coastal locations, properties with older roofs, or high-value residences may not experience the same improvement reflected in statewide averages. One valuable step is obtaining a wind mitigation inspection. That inspection documents features such as roof-to-wall connections, roof shape, opening protection, roof deck attachment, and the age and building code under which the home was constructed. Qualifying features can produce meaningful insurance credits. However, those discounts generally apply to the wind portion of the premium, not automatically to the entire insurance bill, and the actual savings can vary by property and insurer. Ask whether the seller already has a current wind mitigation report. If not, speak to your insurance agent and inspector about obtaining one. When practical, obtain a preliminary insurance estimate before writing an offer. Once you're under contract, obtain a written property-specific quote immediately, well before the application, inspection, financing, and insurance-related deadlines expire. Do not ask only for the annual premium. Ask about the hurricane deductible. Ask whether flood insurance is required or recommended. Ask whether the roof will require an inspection or replacement. Ask what dwelling replacement value is being used. Ask about exclusions, water damage limitations, and whether the quoted coverage is adequate for the property. The least expensive policy is not necessarily the best policy if the coverage leaves you exposed when you actually need it. Discovering late in the transaction that the annual premium is thousands of dollars higher than expected creates unnecessary financial pressure. It can affect your monthly payment, your debt to income ratio, and in some cases, your ability or willingness to close. I help buyers look beyond the purchase price and understand the fuller cost of ownership, including homeowners insurance, flood insurance, property taxes, HOA fees, CDD assessments, maintenance, and other expenses that determine whether a home truly makes financial sense. I'm George Latos with Zachos Realty Design Group, and if you're buying in Lakewood Ranch, Sarasota, or anywhere on the Gulf Coast and want help evaluating the real cost of owning the home before you commit, call or text me at 941-685-9412. That conversation is free. Getting the numbers wrong can be very expensive.